like this more,
Yeah,
or
that's
should I
good.
do vertical?
That's nice.
But that jobs with our dimensions. Okay, we're
Your
live.
the top of your head is cut off though.
Let's
Okay.
make sure that we're okay. We're live over here. Welcome everybody to the breakfast show. Consistency is key. This is our fourth week doing it, and all we've seen is sideways. We've 4 weeks of sideways movement. So hopefully you guys don't get bored. Hopefully we don't get bored and we stick around for a while because and this is kind of a question we'll ask the panel in a second is how much longer can we go sideways before something gives. But before we do that, let's say hello to our special guest, Anton. It's always a pleasure having you on and having a conversation with you. And last time we spoke was a while ago under completely different circumstances. Markets have changed, and we were both very deep in real world asset tokenization. And I'd love to hear your take on if that's still a focus for you at the moment and in general. But before that, maybe just for the sake of those few people living under a cave who still do not know who you are before they come out their cave, why don't you just give us a brief intro and then we'll kick things off from there.
Awesome. Awesome. So first, thank you very much for welcoming me. Pleasure to be on your show. And think really today we'll have an awesome discussion that's, I think, overdue because it's been a while since we spoke, and the markets and the environment and the vibe and things happening has so much changed in the last couple of months. So really excited to talk to you. My background, originally coming from traditional finance. So from the evil world, I worked at a hedge fund, big hedge fund, as a high frequency trader. Had a blast doing that. But then I like to tell to people that I was at the right place at the right time. And in 2013, co-founded the second ever crypto company in Switzerland, where I would build a crypto exchange. Had a massive blast doing that. So you can imagine it, early days, very few people in the crypto space. We're building a crypto exchange. Nobody understands what crypto even is, what blockchain is. We looked very funny back then. The company was a huge success story back then. So over a 5-year time period, from 2 to 200 people, offices over the world, one of the biggest and oldest crypto exchanges in Europe. Did an exit, had perfect timing, had a perfect feel for timing. Did an exit in January 2018. I still remember those days when I went and talked to my partner. I said, I want to move on. I want to do something on my own. I think Bitcoin was hovering around 20K, so very good timing to do an exit. And then launched a market making company. People usually ask me why a market maker. It's because when you run a crypto exchange, you learn the first day how important liquidity is. And a market maker is a company who solves that problem. And I saw a big opportunity in that. So I was leading a market maker for 5 years, market making all of your exchanges, working with all these sharks, It was also a blast, but a very different experience. And did an exit in 2022. Again, had a good opportunity for timing. In summer of 2022, I do an exit, had a garden leave. First day off from my garden leave, FTX explodes, So I was like, dodged the whole story, and then kind of dived into real world assets, which I've been working on for the last 2 years as a part of a DAO called Swiss Asset DAO. Real world assets are an excellent narrative, really, I'm a big fan of what we're doing there, but also I'm very realistic how early on it is in tokenization of real world assets, and also very realistic about the challenges on the regulatory side, and now having a blast, I think we're on a massive bull run now. Very happy for that. Looking forward to hear what you have to say about the current bull market and how the summer is going to look like. But let me throw a curveball for both you and Mati now. I think we're going to have the most boring crypto summer that we have ever seen. So I think the volumes are going to go down, the activity is going to go down. People are going to start doubting that this is a proper bull market. Some people will start saying it's over, get out now. But the veterans, the OGs like us, we know it's not the case. But I think the most boring bull market summer, kind of like the DeFi summer of 2020. And I think end of the year is going to be spectacular. So that's my kind of take where we are and where we're going. But happy to dive in more.
Thank you, Anton. Let's bring in Mati. How are you doing this morning? What's your feelings?
I'm good, man. I'm really good, Anton. That's quite a prediction there. Where are you? Are you like in a hotel or what's going on over there where you're at?
I'm in Cyprus, so visiting my friends. I live in Dubai now, so I moved to Dubai a few months ago from Switzerland, and now I'm in Cyprus visiting friends, and hopefully it looks nice.
Anton,
It's
this
very
is
close.
alpha. This is alpha that I don't even think Michael Saylor knows. There's a Yalla Bitcoin summer party in Tel Aviv on the 18th of July. Right? I don't know. Mati
Yes.
might be away in California. I don't know where.
That is the day I'm flying, so I
That's
don't
the
think
day
I'll
you're
be there.
flying, so we can
But I
tell
do
that
love.
pilot to hold up. But if
Yeah.
like, you could be the guest of honor. We will give you a crown and a seat like the king, and we will have grapes and tequila shots ferried to you. So
And I
Nice.
think
that's just to know, everyone out there listening.
It's
18th of
on your
July.
way back from Cyprus. You can stop by in Tel Aviv before you go
exactly.
to Dubai. It's right
Yeah.
smack in the middle.
I agree. So
Uh,
I'm all in, but just to tell you, I don't drink, so we need to find something else, to replace that. But otherwise, I'm all in actually. Yeah.
okay
Okay,
then.
so we can get you a coffee, a matcha latte, something healthy. There's a lot of that in Tel Aviv. But
There
to
you
your
go.
point, to your point, like, when we threw, look, I remember last time we did an event that was like it marked the top. It was like our last event was around March, before we started ranging. So hopefully this event marks the bottom, because we deserve it. But yeah, people, it doesn't. When you say the bull market, like, for a lot of people, it doesn't feel like a bull market right now, especially the people that are heavily skewed towards altcoins. Bitcoin keeps ranging. It's doing its thing, and, like, if you're a Bitcoiner, if you have a 9 to 5 job and you're going about your day and you stack sats on the side, for you it's a normal day. It's, if you feel good, your Bitcoin's looking good, the fundamentals are strong. But if you're, a DJ and you spend your whole day on crypto Twitter and you're seeing people fight and you're seeing, for me, like, one of the biggest stories of the last couple of weeks is Layer Zero. So Layer Zero was a interoperability protocol. They dropped their token like a week ago or so, and that token is actually trading under the value of its last private market round, which means that
What's the ticker there?
ZRO. ZRO.
Let's bring up the
Is
chart here. Hold on real quick.
Put up the chart. Mati and his chart magician. So for me, that's a very powerful anecdote, because for a while it seemed like crypto VC was a no risk game where you just get in early and the valuation of the tokens always go up. It's recovered. It looks like it's recovered somewhat.
Yeah, I
Which was
would call that a nice, healthy recovery, honestly.
yeah.
It's very difficult. Like when you have a new token like that, it does take a while for the market to kind of find the correct value for it. But what it seems
Yeah.
like is that
This
we're
is the
almost
this
exactly
is a
back
good chart.
to the IDO price.
I mean, every chart that of every token that launched in the last couple months has a chart that looks something similar to that. Like, most tokens are trading below their initial price. So this is why, and as Anton mentioned, it's already not feeling like a bull run, because Bitcoin's trading sideways, but all these other coins are, and we're starting to see some recovery, but at the end of the day, these altcoins took quite a hit last week, so people are still PTSD from that. But maybe
But
yeah.
It
I,
seems.
so I think, like, I love to discuss this, narrative, of listing the tokens at sky high valuations. But before we dive into that, I have a question for you and Mati, and for the whole audience. Do you remember, or do you know, at what market cap did Ethereum launch in 2015 when it started trading? So
I
everybody
don't
who's listening,
remember.
good. It's difficult to remember. It's like, but for everybody in the audience listening, write in the comments, or
That's a good.
and
That's a
let's
good
let,
trivia.
let's make it simple. Let's make it
I think
simple.
we could Google it, right? It
Yeah, you can
should be
find it
Googleable.
easily. So like, but you can imagine, was it over 100 million or was it under 100 million? Let's just think about that. What do you guys think?
Over 100 million, under 100 million.
Yeah. So just like, can you think
Definitely
about
under
it?
100. I would say it launched with a, let's say, $69 million market cap.
You're very close. You're very close. Divide that by half. So it launched with 35 million. So you could buy Bitcoin. Sorry, you can buy Ethereum at the beginning in the early days at 35 million.
And now we're talking, now what's the market cap of Ethereum? It's probably,
Now
I think
it's
it's
like,
60 billion.
yeah, exactly.
Nice.
So and now if you compare, a bunch of these other tokens that people are listing now, and they're listing them like at 5 billion, 10 billion. I mean, the fully diluted valuation, it's like sky high, insane, And what the very important point, what I'm trying to make here, is that the new altcoins that are being launched now, they're not enabling people to become rich.
Yeah.
So you could have bought your Ethereum, you could have bought your Ethereum for a few $1,000. The little that you had, you could then throw it in and said, okay, damn it, I go in and let me put it. And then if you have the big cojones, the big balls to hold it for so long, you could have become rich with a few $1,000. With this stuff that we are looking at the screens, not this one, but the other one, you cannot become rich by buying this stuff, actually. It lists on an exchange at 8 billion, 10 billion, 5 billion, doesn't matter. And whatever you buy there, you are just exiting liquidity for these clowns for getting out. By that, I don't mean us, but I mean the VCs, that are somehow now trying to find a bid so they can sell their pre-seed, seed, or private rounds. And I think that's a big problem now with altcoins these days, that if you go into that, it's just like a high guarantee you're just going to be underwater from the day of the listing for a foreseeable time period.
Yeah, I mean that's what you said. Like, it's why you can't get rich off altcoins except for insiders. So I think you mentioned FDV, and FDV, fully diluted valuation. For those who don't know, that market cap used to be the way we used to kind of benchmark the size of crypto project for a while, and then people realized you can't use market cap, because what if I have a project where there's 10 million tokens in the supply. Each token is worth $1. So it's got a total supply of $10 million FTV, but I only have $1 million in circulation. So that's not a good metric. So that's why I think FTV became a metric, because you had the Ethereum ICO, which was, the Bitcoin maxis like to harp on it for being pre-mined, but it was relatively fair. And then the ICOs that came afterwards, people were dumping instantaneously. So you needed to add those lockups, those vesting periods, and that's when FTV became a narrative. And then as you go for more rounds and more rounds, and you delay and you hype up the project, you need to add, more lockup, stagger the rounds, private round, KOL round, strategic grandmother round, and then each guy gets a different FTV, each guy gets a different valuation, a different lockup, and the result is that we just have these multi-billion-dollar chains where you see the graphs. Maybe we can pull up a graph of transactional activity on these chains. Like, the second the airdrop is over, it just goes whack down. And I want to ask you guys a question about that, and that's, will we ever reach the end of the infrastructure phase in crypto? Because right now, all the projects that are coming out with massive valuation, large rounds, airdrops, are all L1s, L2s, interoperability. It's all very infrastructure. And in most cases, they're not adding more to, they're not innovating. It's just copy paste EVM with a little change here, a little change here, some different branding, and you have another chain worth $200 million. Are we going to get to a point where people are going to start being incentivized to build apps on those chains that the masses will use, or do we have 10 more years of copycat L2 ahead of us?
Yeah, so first of all, that's an excellent point about the market cap. So looking at Layer Zero's market cap right now is $420 million. So brand new coin, I don't know. Well, you gotta literally reinvent the wheel in order to justify that market cap at this point. With those so few users and market recognition. But yeah, I think that to Duda's question, I think that it really is the layer ones that require a token, right? I mean, most of the newer projects or the projects that build on top of the layer ones, I mean, having a new token only makes things more complicated, not less complicated, right? So launching a new token, you really have to sit down and say, okay, what is the utility of that token? How does it exactly fit within the app that we're trying to build or whatnot, and do we really need it? I mean, in the early days of Ethereum, right, the DAO, for example, in 2016, it wasn't like, hey, let's launch a new token and call it was actually on Ethereum, right? And I think that that's how it kind of should be. Never mind that that project fell apart because it got hacked and whatnot, and then ripped the community in two because they said, hey, we should go to a new community or new Ethereum or an old Ethereum, and eventually Vitalik won, of course. But I believe that the infrastructure phase is gonna continue indefinitely. I think that people are gonna always continue to try and um, launch launch new tokens and launch new layer ones because they can, and for as long as it's profitable, they will continue to do so. And I believe that each one kind of improves on the last, maybe a little bit, as much as a dog drinks water from an ocean. But it eventually, I mean, the technology will continue to improve. But what you find that in decentralized finance and in blockchain in general, it's not always the technology that really matters, right? I mean, Bitcoin's technology is not the best. I mean, it's slow compared to most other chains. It's expensive compared to most other chains. Yet it is the gold standard of crypto. And the reason for that is the network effect, right? Because when we're dealing with cryptocurrencies, we're not necessarily dealing with, companies or technologies. It really is about gaining critical mass, gaining adoption, and gaining user recognition. And that's what Bitcoin has over all of the rest of them, even though its technology kind of sucks in comparison. And I'm fine with that because the revolution is not about who has the best technology. That's not it. It doesn't matter. Otherwise, XRP would have won a long time ago. And now, some other ones will continue. And that's how you can also guarantee that the value will for the long term also. So you can be sure that in 10 years, nobody's going to invent a better Bitcoin, right? Because nobody cares about the technology. It doesn't really matter as much as people might think. So to that point, people will continue to launch layer ones because they can, and especially at this point with the valuations, as Anton was pointing out, being sky high. Yeah, they will continue to launch those layer ones, but also I believe that more and more often what you're going to see is that new people or new developers, new projects that are building on top are not going to necessarily go, hey, let's launch a token as their kind of default go-to market strategy, but rather they're going to start, building on top of they're going to choose a layer one that they want to work on, and then build on top of that, or even several layer ones, as the case may be.
Anton, I want to bring you in here because you've been through more cycles than the Pope. So, like, how do you see, like, are we stuck in this never-ending story, like, endless loop of L1, L2s launching with very little innovation, or do we
Yeah.
see apps? Do we see value moving to the app layer? I mean, this brings to mind the Fat Protocol thesis from
Yes.
2017. I forgot who authored it, but that couldn't be more true. The idea that the value in crypto accrues the lower you down you go. So if you have an L1 and then you have L2s built on that, and then you have apps built on the L2s,
Yes.
the L1, like Ethereum will have, the idea is that Ethereum will always sort of be more valuable than all the apps that are built on top of that. Will we ever see something flipping in that equation?
Yeah. So I absolutely believe that there's going to be a flipping or a regime shift in a sense that applications are going to be more valuable are generating more revenue and going to be more capital efficient. I'll explain that later, than the underlying layer. And you actually explained that very, very well, that there's a belief, there's a narrative in the crypto industry that you can extract more value from the infrastructure than from application, which is completely different than how internet evolved. Like the most valuable internet companies are not the infrastructure companies. It's your Facebook, your Apple, your Microsoft, and so on. Although you can argue, well, Nvidia is now more valuable than the whole thing, but I don't think Nvidia was like the internet infrastructure layer. So the ICP.
No, it's a hardware. They're selling something that is physical in the physical world.
Exactly. So, unlike the internet evolution, people think that, you're going to be able to generate more money or make more bigger investments if you invest into infrastructure. I disagree with that. I think that's not going to be the case. I think for the moment, you are going to have more and more L1s and L2s being launched. But I think the future L1s and L2s are not going to come from the people or places or companies that you think of. And I'll explain what I mean by that. Is that, I think like what Binance did in the early days with Binance Smart Chain was actually a very visionary move. That you had a very big company who launched its own L1 actually. I mean, it was a copy of Ethereum with delegated proof of stake where they delegate who are the validators. But Binance kind of had this vision is let's launch our own chain. And today, if you see who is launching their own L2s that are actually quite successful, I think a great example is actually Coinbase with Base. So they launched literally an infrastructure layer, and they have a distribution channel, meaning all of these developers, all of that liquidity, all those users that they can push through to that L2, and then people can build on it, use it, and so on. Similar example is Telegram. So Telegram launched its own L1, Tron, and now they have this 500 million users they have to push through to go on the infrastructure layer. I think what today what still dominates and rules is not actually the users, it's not the activity, it's liquidity. And if you take a closer look, you see that Ethereum has sucked up all of the liquidity. And all it's stuck there. You have Arbitrum, you have a little bit on Base, but if you kind of move, and Solana, but if you kind of move down the ladder, you will see that all these Algorand's, Hedera, so on, if you kind of go there, look at, there is no liquidity there. It's a zero. There is no, I mean, they have liquidity in the sense of their native stablecoin, native coin, native cryptocurrency, but they don't have liquidity in the sense of real ones that comes through the stablecoins and so on. But I think this is the first.
I've got a question for you. Speaking of liquidity, what is the number, Ethereum number 1 in TVL? What blockchain is number 2 in TVL?
So app is Lido, if I'm not mistaken. It's even bigger now than Uniswap. But in terms of L2s, I think it's Arbitrum, which
Not
has
L2s,
the most.
all chains in TVL. I'm going to share the screen, but before I do, I want to see what you guys think.
It's Ethereum has the most.
Ethereum, and number 2 is?
Solana, in my view.
Tron.
Mati wins this round.
Okay.
I looked it up. I cheated, man. It's on DeFi Llama. Just look at chains.
But I need to explain why is Tron, because people always point to me at that and they say Tron has so much liquidity, and I'll explain why Tron is being used. Because I used it when I was a market maker. Tron is used exclusively by hedge funds, prop shops, and market makers to move stable coins between the crypto exchanges, because the transaction fee to move those stables, if you move them a lot like market makers and prop shops do, is close to zero. So Tron has no utility beyond the prop shops and market makers using it to move stables around. So,
but you can also use Tron to move stable coins across countries and globally as well.
But this is a microscopic use case, because I know, because
I agree. Yes.
Yeah. The amount of stables we used moved on Tron between the exchanges basically within a couple of days was bigger than everything back then that people moved for remittance or payments purposes. That's just a fact, actually, and I know it because we did it, But look, I wanted to just finish, kind of where I see the next step, because we're always kind of thinking what's coming next. So I think today, if you take a look at that liquidity that's being stuck on chains or on dApps, you see that it's highly inefficient, in a sense that you have a lot of liquidity stuck within an application or a chain. But if you look at the revenue divided by the TVL, the number is abysmal. And that's completely different how people behave in finance, because in finance, I don't know if people ever worked in a hedge fund or a bank, But if you want to get capital to do something in finance, people tell you, okay, but what return I'm going to get on that capital, give it to you. What I'm going to give you a capital charge for giving you that so you can make money. So how efficient are you using that capital, using that liquidity? And I think the next step would be who can create a DApp that makes a lot of money on a very thin liquidity base. And if you take a look at Uniswap today, you see it has a humongous amount of liquidity, but it doesn't generate a lot of revenues compared to that liquidity. Same if you look at Lido. Lido has huge amount of liquidity, but if you say, oh, but how much revenue does Lido make in the end, or for its users, is microscopic. And the next phase of evolution is saying, how can I, on the 10 million liquidity, generate 100 million in revenues? Instead of, how can I have 10 billion in liquidity to generate 1 million in revenues? So I'll leave it at that.
Okay, you've got my interest. Like you saying, how can I get 10x the revenue for the liquidity that I have in the pool? Obviously, fractional stuff. So, what options are there? Because right now, as you mentioned, trading fees on DEXs are a couple basis points. The Ethereum staking rewards aren't that high. So, how are we going to get to a point where on-chain revenues are multiples higher than the liquidity of TVL?
Yeah, I mean, I can give a hint in that. For that, you need to do financial engineering. You need to do sophisticated financial products that actually justify that you deploy capital into them. And maybe, go ahead.
Well, before we do that, we need to build bridges to the real world, because I mean, until then, we're just shoveling shit from one corner of the room to the other.
Fair point. But I'll give you a hint where that potentially could happen, but it doesn't exist today. So again, running a market making company, what you learn that market makers in the traditional finance or in the crypto world, they have a very thin capital layer. They actually don't have a lot of capital. They borrow a lot of capital, but they have very little of their own capital. But for the amount of money that they make on that little thin layer of capital, they're extremely, extremely profitable actually. Same goes for some really sophisticated hedge funds. They don't have a lot of AUM, but they make a lot of money, with that AUM. So, but you can only do that with financial engineering. So if I have to give a hint for the future, can we build a decentralized market maker? So take your jump trading, take your tower, take your citadel, put it on the blockchain, put some capital in, but not a lot. And then on that small capital base, make, pardon my language, shitload of money. That's kind of how I see where that next phase will be. But this is not easy. Building a market maker in a fully centralized environment is already super difficult. Imagine doing that in a DeFi space. But that would be the dream. Let's build a DeFi
I mean,
market.
for every one of those companies that you mentioned, I mean, there's another 100 that tried something similar and failed. It's not an extremely simple process to build a money making machine. Even with loads of talent, you still need to have exceptional planning and very good luck. Yeah, I'm not sure that's what I'm not sure that that's what's good for the world either. I mean, who needs another, who needs another hedge fund out there, right? I mean, how does that help the world? Maybe it helps some people get rich. Okay, maybe, but does that really help, the guy on the street, or, your average Joe living in a developed economy? I'm not so sure. Maybe unless he was lucky enough to get in early before they, made millions of dollars. Okay, but you're not gonna find, like, for every one of those projects, like I said, there's another 1,000 that tried and failed. So maybe, if you get 1,000 people from developing economies to put in $100, I mean, well, 999 of them are going to lose their money, and one of them is going to get really rich. I mean, how does that really help the world? It's, again, we get to the point where we're playing a zero-sum game, and I don't think that we're really creating much value here. So, is there actually, like, if what your dream comes true over here, and we have one of those on the blockchain who's able to generate lots and lots of trading volumes and lots of revenue from thin liquidity, how does that help, dude in Papua New Guinea who's got $500 to his name?
For me, like the fact that you're giving the Papua New Guinean an opportunity to, I'm still trying to wrap my head around, like, how that decentralized market maker be different from like an AMM on Uniswap. But once I do, like, the fact that average retail gets an opportunity to get involved in financial market making or like financial role playing that was typically reserved for institutions, is doing good for the world, because you're taking that whole value capture that Wall Street has had a monopoly on for generations, and you're spreading that out across the world. But for me, I think anytime you talk about trying to like get a multiple of your TVL in revenues, the reason everything's over collateralized in crypto is because the assets are volatile, so you have to lock more of them up in order to make sure that you have the collateral to back the loans that you take or the positions that you take, and B, because we don't know who you are, so we can't trust that you'll pay it back. The second you introduce, I think, decentralized, identity and reputation, that is super important. Like if you have a reputation score attached to your wallet that shows that you're a top guy, an entrepreneur, you have a credit score, sort of a decentralized credit score. I think that's pretty much key for the next round.
Maybe a little bit, Dudu. I mean, how many people are going to lend people money based on their decentralized credit score? I'm not so sure. You're not doing your job, by the way. I see we have plenty of comments in the.
We do have plenty of comments,
and I really appreciate the comments. You know why? Because it tells me that the people who we're seeing
a
as
lot of them
numbers
come from LinkedIn.
They're not just bots.
The Anton.
Oh, LinkedIn. So yeah.
A lot of them come from LinkedIn. We have 2 comments about stacks. We had one guy in a WhatsApp group asking about the ETH ETF, which I kind of want to get to now. We'll talk about.
You should be able to display questions on the screen. I believe
you can do it like this.
Yeah,
What do you think
go.
about ETH restaking tokens like Renzo and ETHFi?
You want to go ahead, or should I?
I've never heard of either of those, honestly.
It's like Eigenlayer. I mean, I'm still trying to wrap my head fully around what he's talking about. What ETH restaking token is. It's the idea that like you can liquid staking, where you can shared security, where you can stake your ETH and then use a wrapped version of that to stake elsewhere. It's a lot of leverage. Maybe Anton, maybe you can comment on it. I think for me it feels like I don't think it's it
sounds like a scam, dude.
It's not I wouldn't say scam, but it's the kind of thing that adds risk. If the bottom of the if the bottom of the food chain, if something breaks, then there's a lot more things that can go wrong and amplify the risk. So I don't know if I haven't been watching restaking too closely, even though I think from a technological point of view, it's quite a big innovation. How about you, Anton?
Yeah. So you mentioned the key word around restaking, and that's leverage. So, basically to get a higher yield than you would get usually if you just take your Ether, because today actually, staking yield on Ether is quite low, at least in crypto terms. Then we can enhance that yield or even increase it, but also by taking more risks, is actually to restake those tokens. So literally what happens is you stake your Ethers, you get a token that represents that, and then you stake those tokens again, in a sense that they are actually kind of actually the goal is that you kind of increase the security of the protocol or of the layer that's built on top of Ethereum. So look, what I have learned in my career, actually, that leverage is very, very dangerous, even if you're a professional trader or a professional investor. And for retail to have access to that, I think this is definitely something that's not going to end well. I have even said, very clearly that I think that restaking is going to be one of the narratives that's going to crash the market in year and a half, where it all kind of starts unwinding. And I think I just think that for the time being, is going to be too much leverage being piled in the crypto ecosystem, and it's all going to end up not so exciting and happy as people kind of imagine it. So look, not giving financial advice, but I personally don't do it, and I would not do it just because there's too much leverage and too much risk involved. That's
okay. So I want to play a game with you guys before we go on to the thing, and this is a game we play every week on the show, Anton. It's called A Pot or Dump. It's the shag, marry, kill of crypto. where we give you 3 tickers and you have to ape one, you have to hodl one, and you have to dump one. So, let's start with the majors. Last week we did real estate, stocks, and bonds, and sort of a common refrain was to dump the bonds. And as Mati said, you should hodl everything else and buy Bitcoin. Today we have Bitcoin on the chart. So let's see what you guys think. BTC, ETH, and SOL. Which one are you buying? Which one are you holding? Which one are you selling?
On my side, so I'll tell you what I'm actually doing. So I would buy Bitcoin. I think this is an excellent, opportunity still, and I think for the next months or even a year or so, Bitcoin is going to perform really well. I would hold Solana actually, because I think it's going to perform really well, and also on a relative basis to Ethereum, and I would dump Ethereum actually. Not because I don't like it, not because I think it's anything bad. I just think from a perspective of getting a return on my investment, I would dump Ethereum. Having said that, none of this was a financial advice, so I leave it guys to you.
That's not financial advice, as we say. NFA, it's just a game. It's just for fun. Obviously, we're not saying how much we're buying, when we're buying, entry prices. That's what's very important. When we when we play these games, you say not financial advice, because the trick of, as you guys probably know, it's not in what you buy, it's in all the little details of how you execute your trade. What price do you get in? Where do you set your stop loss? How much units do you buy? What's your exit strategy for take profit? So all these things, need to be in place. So that if you say to someone, buy Solana, they go and they, put their life savings in Solana at the peak, and then they dump when it moves against them 5%. That's not the way to go. So that's why it's very important to, have that disclaimer. And Mati, how about you? What's your take?
Buy Bitcoin, hodl, ETH, and Solana.
You're not
Plain and
selling
simple.
anything. Not
Why would I sell anything? No.
Yeah, Mati likes to break the rules of the game, but that's why there's a game. That's why there's rules in order to break them. I agree
What are
with
you gonna tell
Anton.
me? I mean, that's not how trading works. You have to sell this. Somebody holds a gun. Yeah, I had an analyst one time who's like, well, the way I would think about it is, I look at the price of crude oil, and then I think if somebody had a gun to my head, would I buy or sell right now? I'm like, geez, dude, you're making my brain hurt over here. That's not how shit works.
Okay, you can hodl your coin. I'll let you hodl. I'll never convince someone to dump right now when there's sideways action. Like it's you don't have to stick to the rules. The rules.
I'll tell you what's happening right now, dude.
Rules are
It's
for
very
lower men. By the way, I agree with, and let's pull up the chart, but I agree with Anton. I think I see more upside in Solana in the near term. But that being said, always buy BTC because, as I say, like to ETH maxis, remember the flipping. People were like, oh, ETH is going to flip in Bitcoin because it's faster, because it's cheaper. And now look what's happening. There's discussions of Solana flipping ETH because it's faster and it's cheaper. So you got to be careful what you wish for. And I think Bitcoin has a unique advantage in that it's got no competitors. Bitcoin Cash, Litecoin, Dash, all these tokens that were, the next Bitcoin with faster privacy, DAG, Nano, they all fell
not
apart.
about the technology, right? It's not about the
they all fell
technology.
apart. And Bitcoin is the only store of value out there, the only cryptocurrency. And Ethereum has a bazillion competitors. So even if it beats them, it's still okay. What we have here in the chart, even if it beats them, it's still at a risk of losing market share. So we have a chart here of the range, the golden range.
That is the golden range between $60,000 a coin and $72,000 a coin, approximately. We are giving a very nice test to that bottom of the range. Pay attention to the blue line over here. That is your 200-day moving average, and it has served as a support line throughout this bull market and many others indeed. And yeah, we are giving a nice test of that. I do believe that right now, I mean, if we really want to zoom in over here, we got some consolidation happening around the lower end of the range. A breakout below this blue line could be catastrophic. We'd then be like pulling up Fibonacci's and saying, okay, where's the next level of support? Which we can do now pretty simply if you like. We pull up that sorry, the Fibonacci level. And then we can see that, yeah, we're just, look at that. 60,000 is the first Fibonacci level. Okay. The next Fibonacci level down is around 51,600. So break below the blue line could lead to there. More likely scenario, in my view, given the fundamentals, given how bullish Bitcoin is, given how everybody loves Bitcoin lately, especially institutions, corporations, nation states, and everybody like that. I do believe that we'll get another test of that blue line and then off to the races. Because as soon as we pass 65, you're going to get the range traders who are looking for 70, and then we're testing the top again. Once we break that top, that's where an all-time high territory, and the sky is literally the limit.
Thank you for that analysis, Mati. And now I want to move on to our main question for the day. We're nearing the end, so we can tackle this. And what's your guys' reaction on the debate? I think people that were trying to think, will Bitcoin come up in the debate? Will it not? It didn't come up in the debate, so it's obviously not such an issue. But it's
because it was CNN asking the questions. They didn't want to ask. They didn't want to ask Biden about Bitcoin.
Jake Tapper is a shitcoiner. But I want to get your take on it. Like, what is your reaction? What was your reaction to the debate? What do you think the next six? Obviously, the U.S. elections are probably the biggest event for Bitcoin crypto in the next 6 months, because it defines what the next administration will look like. Do we get another 4 years of Elizabeth Warren, Gary Gensler being complete dicks to crypto? And the weirdest thing is when you see that screen of forbidden countries: North Korea, China, Iran, Iraq, Syria, and the US, on those crypto depths. So will we see more of that, or do we see something different? Do we see a new era in crypto US relations?
Yeah, excellent question. I love the debate. It was 4 a.m. my time. I sat down with a beer. I was waiting for this debate for so long because it's been almost 2 years since anybody has seen Joe Biden speak for more than 5 minutes at a time or speak publicly. We've been seeing these videos come out of him kind of losing it, and we haven't really seen any kind of videos of him acting strong or even just intelligent in the last 2 years. So I understood going into this debate that this is what was going to happen. I was kind of proud of Joe. He was able to stand for 90 minutes. He didn't need help getting off the stage afterward, but he was able to stand for 90 minutes. But yeah, he definitely lost it. And even, people that I know who generally vote Democrat are telling me there's no way I can vote for a baked potato. I can't do it. And I believe that this is an excellent thing. Maybe they're talking about swapping him out with Michelle Obama, and I think that that's hilarious because everybody already knows that it's Obama pulling Biden's strings. So why would anybody go, okay, well, we'll vote for the puppet master's wife instead, right? It's very clear to anybody who's paying attention. If you look at the economy, if you look at geopolitics, Joe Biden has fucked up the world royally. I mean, everybody knows it. It's not a secret. Just about everybody that I speak with today is having massive financial problems. Whereas, if you compare that to 4 years ago, at the end of Trump's candidacy just before COVID, everybody, or even after COVID, everybody was flush. So it's not very difficult to pinpoint where that came from. It came from excessive money printing, excessive spending on things that don't matter, corruption, cronies, spending money on things that are green and then just handing it to the project leaders who are actually their friends, or printing money and giving it to themselves. It's a sham. We know it, and we believe that. Look, I don't think that Trump is a saint. I don't think that he's like a perfect person, but I believe that he'll at least stop the corruption on somewhat, stop the money printing and fix the economy, because under his reign the first time, the economy was fantastic. And I believe that that's what we'll have again within the next year or so, because in my mind, there is no way in God's green earth that the Democrats take any kind of win from this election unless, obviously we see the illegals voting in a massive scale, in which case, the Republicans would rightly cry foul. But we'll see how that plays out.
Okay, so look, Mati said it perfectly that, in the end, what matters is do people live a better life or not, depending on these political changes. And look, first to say is, I didn't watch the debate in full, but I kind of saw the snippets, and I've been following the situation, as an outsider because I don't live in US. But I just first want to say is, I really feel sad for Joe Biden. And also I'm quite dissatisfied with the people around him who let this thing happen, that he goes on national stage and, demonstrates that he is not really at the top of his game due to his age, which is natural, right? And I think this is really a shame that, how this is, the election is evolving, and the people who are still pushing that he goes out and nominates to become a president, because he's not capable of being a president. And you see that in real time on TV for like an hour. So really, I think that's, and I think because of that, it's highly likely that Trump will become a president. This is kind of my thoughts. Trump becoming a president will lead to two things, in my view. First of all, he'll be highly concerned how the U.S. economy is doing, and I expect that there will be tax breaks, incentives, even straight out money printing to support the companies that build and hire locally. So people who, companies that build in US, that hire US people, he will do everything that he can to make their life easier in any way possible. And on the other side, Trump is a businessman. He also knows the markets. He knows that markets are extremely important. And I would expect that there will be, he will be working together in one way or the other with the monetary authorities to lower the rates so the markets can go up. So in plain language, this will all lead to money printing, one or the other, and this will be like highly beneficial actually for crypto and all hard assets where you cannot create them out of thin air, in my view. So this is, how I anticipate it will happen. And I think all of these things that I mentioned will be completely irrelevant. Like, it will not be crypto driven. There will be macro driven. They will be driven by the US economy, but the crypto will be the beneficiary of a lot of these things that will happen following the US elections. Yeah.
Yeah, massive quantitative easing on all fronts.
Yes.
I can definitely foresee that. And then obviously friendlier regulations. I think the US needs to catch up. As someone says, they have regulatory FOMO.
Just take Gary Gensler to the gallows, man. Just take him to the gallows. Don't even bother with a fair trial. Honestly,
Yeah.
he has damaged the United States so much. They've lost critical years in crypto adoption, and even China is farther along than the United States right now, which is just a shame.
Yes.
Yeah.
Yes.
I love that you put this question up, by the way. I screenshotted it. I was going to actually answer this question if you didn't get to it on an upcoming episode of Ask the Advisor, because this is what we're building at Cora Finance. So Cora.finance, we're building a mobile app that will help people navigate DeFi world. And I believe this is the culmination of two technologies that are both designed to help humans, and we can apply them to helping humans beat the markets, because financial markets, from the time that I got involved, were always slanted towards the insiders, always slanted towards the billionaires and trillionaires, and they still are in a very big way. Blockchain changes this, or enables the change of this, just like the internet is a tool for freedom. Blockchain is a tool that enables people to build tools for financial freedom, financial democracy. However, it still is riddled with scammers, hackers, rugs, just bad actors that come in and can destroy it. But every single time one of those things happen, I mean, obviously the industry gets stronger. We learn from every hack. We learn from every rug. We learn from everything that every house of cards that falls down. You learn how to build it back better. And DeFi comes in and is an excellent tool for navigating these things and learning from them and teaching the people who are uninitiated. Something like 76% of users who enter DeFi end up leaving because it's just too obscure and it's just too inaccessible. But AIs can actually come in and navigate very well. So our app, which is going to be released very soon, will be able to audit smart contracts in real time and say you just give a token address and it'll tell you, okay, here are the vulnerabilities, and then it can even snipe transactions. We did a test transaction the other day on the live markets, which was settled in less than 4 seconds. So yeah, this is what we're building, is basically put AI, put DeFi together and give it to a consumer in a way that your grandma will be able to understand how to invest in DeFi, and give her the tools to be just to make, instead of a 1% being successful in the market, make the 99% successful in the market. And that's it shouldn't be that difficult, but only with these new technologies, I believe, and the application of them in the correct way, we're going to make it happen.
Wow, Andreas, thank you for unleashing the Kraken. That was a good question and an epic answer. Anton, do you have any closing words about? For me, when I see that question, do you think they'll eventually merge into a single industry? I think of the word singularity, which is a whole other hour of, if you haven't read Ray Kurzweil's book on the topic, it's a must read. Just about the singularity usually refers to how man and machine will merge into one industry, but obviously that hybrid, what's it called, the robots, not a robot, it's a cyborg race that we're growing, will not use fiat currencies that take 3 days to settle cross border. If you imagine trying to send a transaction to Mars and having to go through correspondent banks, so on a long enough time frame, everything's merging into one.
You have to use the moon bank. The moon bank is the intermediary, right?
So I want to hear, like, Anton, maybe you have your final thoughts on AI and
Yes.
crypto merging into one industry.
Yeah, so first, Mati, really exciting what you're working on. Definitely we'll take a closer look. This sounds really, really amazing. And, first of all, that if you can break the auditing cartel, which is not doing much, but charging a lot. And if we can just ship some smart contracts into a prompt and, you tell us what's happening there, I think this is amazing. And also really like the level of sophistication that people need to have to adequately use DeFi apps. If you can simplify that and make it more tangible for the 99% and make them successful, then purely for the 1%, I'm all in. I think this is a great initiative and we'll closely follow what you're working on. So this is really awesome. Look, to be honest, when I now reflect, as Mati was talking, I was just reflecting, what do I use more in my daily life? Is it DeFi, where I came from, or, crypto industry that I came from, or is it more ChatGPT, Perplexity, and I use a couple of more of them? It's actually more AI. So I use day to day in my life more ChatGPT and Perplexity. Then I play around on Uniswap and check what's in my MetaMask wallet and so on. So I think that this is really like an opportunity, a shame, and a big opportunity, in a sense that we really haven't really brought the DeFi world, which is the end game for the crypto industry, the same way that ChatGPT or AI did that in a very, very short time period. So kind of bridging the two together. I don't actually know how this will look like. I just know NVIDIA will make money either way. So that's like kind of my thoughts around it. Again, not being a financial advice, but I think NVIDIA will make money either way. But I think like
but it's all about the multiple at this point, right?
Yeah,
for
exactly.
NVIDIA, I think you just got to be realistic.
Yes, yeah. Realistic is a different, difficult requirement, when we talk about NVIDIA, But look, to be honest, like I don't know how it will look like in the near future. What Mati explained now and what Mati is doing sounds really, really exciting. So maybe that's the way forward. And to be honest, like I've been personally, such a big believer in DeFi, but also so disappointed in what's happening in DeFi, chasing those yields in a completely unsustainable manner, which you already know it's not going to work. It's going to fall apart. And we talked about stable coins, how that is a clear use case, both on the professional trading side, but also both on retail. And just to tell you, like I, as an individual, have many times received payments or salaries, if I can call it like that, in crypto. And I'm happy that it works so fast and so smooth. But, we need to go beyond that. And, how that will look like. You talked about decentralized identity, Dudu, so I think that's also an excellent one. And where does that AI fit into that? I just don't know, man, to be very honest. Like, I'm talking a lot, not saying much, because I just don't know. I'll leave it at that.
But Andreas, excellent question to end us off with some forward thinking. As I mentioned, like it's all going to be intertwined in the future, and as AI takes over more and more of our tasks that we do, it's going to start needing to get paid. And AI agents right now you need to prompt Chat GPT, but we're working towards autonomous AI agents that learn and operate on. Think of your best employee that just goes and does things on their own accord and checks back in with you once in a while. So those AI agents are going to need to start collaborating with other AI agents, and I think crypto is a natural way for that. Another Vitalik mentioned in his article about crypto AI, crossovers is obviously proof of authenticity, proof of realness. With the proliferation of fake news and deep fakes, you're going to need something encrypted to prove that something is real, that what you're watching is really what's happening in the real world. So that's another intersection, and obviously AI coins are pumping as a result. So thank you guys for a beautiful hour. It was really amazing. Thank you to all our commenters, especially to Rami, who commented 5 times. Gilbert as well commented a bunch of times. Hit me up if you want to get on the show.
Real humans, I love it. Look, when we first started this, there were 0 real humans, and then one guy at the end said, "Hey, I'm human." But I think that, yeah, I mean, out of all of the views that we're seeing, probably 99% are bots. So look, as soon as you're talking, we know that you're a human. And when you add to the conversation, we know that there's no AI that can do that yet. So appreciate it when you do leave a comment, because it lets us know that people are actually watching, and that's what that encourages us to continue delivering more of this kind of content.
And Anton, this is the first of many, so enjoy your time in the sun. We'll be in touch, and thank you as always for. We didn't even get to real world assets, so we'll have to cover that in the next round. We got sidetracked on a million and one other things, but that's what happens when you're in. Crypto is not a niche anymore. It's becoming so huge that there's so many sub niches that we can't cover it all in an hour. Thank you for watching the Breakfast Show. We'll see you guys next week.
Awesome. Thanks a lot, guys.
Bye for now.